October 19, 1987. Wall Street traders walked into their offices expecting another normal Monday. By the time the closing bell rang, over $1 trillion had vanished from the American economy. This wasn't a war. This wasn't a terrorist attack. This was something far more terrifying. A market that had lost its mind. What you're about to discover is the true story of Black Monday, the day that made the Great Depression look like a practice run. And here's what nobody tells you. The warning signs were everywhere, but Wall Street chose to ignore them. The golden years, 1982 to 1987 asterisk, the mid-1980s were a time of incredible optimism in America. Ronald Reagan was in the White House, promising morning in America. The stock market had been on an absolute tear. Between 1982 and August 1987, the Dow Jones Industrial Average has skyrocketed from 776 points to an all-time high of 2,722 points. That's a 250% increase in just 5 years. Young traders on Wall Street were making money hand over fist. Bonuses were enormous. Champagne flowed freely. Gordon Gekko's famous line, "Greed is good," from the movie Wall Street, perfectly captured the era as spirit. Asterisk, the new technology, program trading asterisk, but something new had entered Wall Street, something that would change everything. Computers. For the first time in history, traders were using computer programs to execute massive trades automatically. This was called program trading or portfolio insurance. Here is how it worked. Computers were programmed to automatically sell stocks if prices dropped below certain levels. The idea was to limit losses. Sounds smart, right? But here is the problem nobody anticipated. What happens when everyone's computers try to sell at the same time? Asterisk, the warning signs asterisk. By October 1987, cracks were starting to show. Interest rates were rising sharply. The Federal Reserve was tightening monetary policy. The U.S. dollar was weakening. Trade deficits were growing. On Wednesday, October 14th, the market dropped 95 points, a huge decline for that era. Thursday, October 15th, another 58 points down. Friday, October 16th, the Dow plunged 108 points, a 4.6% loss, the worst single day since 1929. That weekend, traders and investors went home nervous, very nervous, but nobody, absolutely nobody, was prepared for what would happen on Monday morning, October 19, 1987. As traders arrived at their desks, something was terribly wrong. The phones wouldn't stop ringing. Fax machines were spitting out sell orders by the hundreds, and then the opening bell rang. Asterisk opening bell. 9:30 a.m. the moment the New York Stock Exchange opened. Chaos erupted. Sell orders flooded in from around the world. Markets in Hong Kong had already crashed overnight, dropping 11%. London was in free fall, down 10%. Now it was America's turn. Within the first hour of trading, the Dow Jones had already dropped to 100 points. Traders were stunned. This kind of decline usually took weeks, not minutes. But this was just the beginning. Asterisk, the computer apocalypse asterisk. Remember those computer programs designed to protect investors? They became weapons of mass financial destruction. As stock prices fell, the computers automatically triggered massive sell orders. These sales pushed prices even lower, which triggered more computer sell orders, which pushed prices even lower. It was a death spiral. Human beings couldn't keep up. The New York Stock Exchange's systems, designed for a maximum of 400 million shares per day, were being overwhelmed. Volume would eventually hit 600 per million shares, an all-time record. Asterisk, the specialists panic asterisk on the NYSE floor. Specialists are the people responsible for maintaining orderly trading in specific stocks. They're supposed to buy when everyone else is selling, to prevent total chaos. But on Black Monday, even they gave up. Many specialists simply stopped answering their phones. They couldn't handle the avalanche of sell orders. Some stocks couldn't trade at all because there were no buyers. None. Imagine owning stock and wanting to sell, but literally nobody on earth wants to buy it from you at any price. That's what was happening. Asterisk lunchtime, The abyss asterisk by noon. The Dow was down over 300 points. Traders were shell-shocked. Many were crying openly on the floor. Some were throwing up in bathrooms. Others were calling their families, telling them they might lose everything. The fear was palpable. This wasn't just numbers on a screen. People's entire life savings were evaporating. Retirement funds built over decades were being wiped out in hours, and the selling wouldn't stop. Asterisk Tuesday, the edge of the cliff asterisk. When markets opened on October 20th, nobody knew what would happen. The first hour of trading was violent. Stocks swung wildly, but then something remarkable occurred. Greenspan's promise of unlimited liquidity started to work. Major corporations began announcing stock buyback programs, buying their own shares to support prices. Bargain hunters started to appear. By the end of Tuesday, the market had actually risen 100 points, the largest single-day point gain in history at the time. The immediate crisis had been averted, but the deeper damage was done. Asterisk the investigations began asterisk in the weeks following Black Monday. Multiple investigations were launched. The Brady Commission, led by Nicholas Brady, produced a comprehensive report. Their findings were damning. 1. Asterisk program trading and portfolio insurance created a cascade effect asterisk that amplified the crash. 2. Asterisk market circuit breakers didn't exist asterisk. There was no mechanism to pause trading. During extreme volatility. 3. Asterisk the markets were fragmented asterisk. Stocks, options, and futures markets weren't coordinated. 4. Asterisk nobody was truly in charge asterisk during the crisis asterisk. The reforms asterisk. To their credit, regulators did implement changes asterisk circuit breakers asterisk if the market drops too far too fast. Trading now halts temporarily to let people catch their breath. Asterisk better coordination asterisk the SEC, CFTC, and Federal Reserve improved communication asterisk position limits asterisk restrictions on how large certain trades could be asterisk improved systems asterisk the NYSE upgraded to handle much higher trading volumes. These reforms helped. When the market crashed in 2008 and again in 2020 during COVID, the circuit breakers worked. Trading paused, panic subsided somewhat, and total systemic collapse was prevented. Asterisk the traders who got rich asterisk here's the twist. Some people made fortunes on Black Monday. Paul Tudor Jones, a legendary trader, had predicted the crash. He positioned his fund perfectly and reportedly made over $100 million in a single day. Some value investors who bought during the panic made incredible returns. If you had bought at the close on October 19th and held for just 2 years, you would have doubled your money. Warren Buffett, who remained calm throughout, famously said later, "Be fearful when others are greedy, and greedy when others are fearful." Black Monday was the ultimate test of that philosophy. Asterisk what about today? Asterisk here's the scary part. Could it happen again? The honest answer is yes. In fact, we've seen several mini Black Mondays since 1987. Asterisk August 2015. Asterisk the flash crash in China triggered global sell-offs. Asterisk February 2018. Asterisk the VIX volatility spike caused a 1,600 point intraday drop. Asterisk March 2020. Asterisk COVID-19 panic caused multiple days of 7% plus declines. Today's markets are even more dependent on computer algorithms. High-frequency trading firms now execute millions of trades per second. The programs are smarter, yes, but they're also faster and more interconnected. And here's what keeps regulators up at night. In 1987, the crash happened over 6 hours. Today, with electronic trading, a crash could happen in 6 minutes. Asterisk the lessons asterisk. If there's one thing Black Monday 1987 teaches us, it's this. Asterisk markets are not rational. Asterisk they're driven by human emotions, fear and greed, amplified now by computer algorithms. Asterisk no system is crash-proof. Asterisk no matter how many safeguards exist, markets can still panic. Asterisk crashes create opportunities. Asterisk the investors who kept their heads while others panicked were often rewarded. Asterisk the Fed will intervene. Asterisk after 1987. The Federal Reserve learned it must act as the lender of last resort during crises. This pattern repeated in 2008 and 2020. Asterisk technology is a double-edged sword. Asterisk computers can make markets more efficient, but they can also accelerate crashes to terrifying speeds. Asterisk October 19th. 1987 was a Monday that changed Wall Street forever. In just 6 hours, over $1 trillion vanished. Fortunes were lost. Lives were shattered. The entire global financial system teetered on the edge of collapse, but it also revealed something important. Even in the darkest moments, when panic seems unstoppable, human beings can come together to prevent catastrophe. Alan Greenspan's decisive action, combined with coordinated intervention from banks and regulators, pulled the financial system back from the brink. Black Monday reminded us that markets are ultimately just a reflection of human psychology, our fears, our hopes, our collective madness. And 37 years later, as computers dominate trading more than ever, the ghost of Black Monday still haunts Wall Street, because deep down, every trader knows it could happen again, and next time, it might happen even faster. What do you think? Could a crash like Black Monday happen again today? Let me know in the comments. And if you want to hear more stories about the darkest days in financial history, subscribe and hit the bell icon. Thanks for watching.